Tax rates are scheduled to go up in 2026. Are you prepared? That's going to be our topic on today's episode of Friends Talk Financial Planning, as Bridget and I talk about what's going to happen with the tax law change and what things you can do and how you should think about that before that happens. Hi, I'm John Shear, and I run a fee-only financial planning practice in Middleton, Wisconsin.
And I'm Bridget Sullivan-Mermel, and I've got a fee-only financial planning practice in Chicago, Illinois. Before we get to the future of taxes, please subscribe. Helps other people find us on YouTube. All right, John. So why don't you start us out? What are you telling people about tax rates and what to do about it?
Yeah, well, maybe we'll start at the beginning, Bridget, and just talk about what's going on with things. Back when the Tax Cuts and Job Act came in almost 10 years ago, the way that it got passed, I think it was through a budgetary process, it had to have a 10-year lifespan. It couldn't be a permanent tax change. Right. So the regime that we've been operating under the last, 7 or 8 or so years is scheduled to, they call it sunset in political language, right? It's going to go away and we're going to go back to the old tax law. Why don't we bring up what our current tax rates are? Here's a snippet from a handout that I get from Retirement Tax Services. You can find information like this all over the internet, of course. But you can take a look in the top box here is married filing jointly, and in the bottom box is single. But over on that right-hand side, there's the marginal tax rates, right? So this is on people's taxable incomes for last year and this year in 2024. And then what that same bracket is scheduled to revert back to in 2026, right? So, and you can see, the 12% bracket goes to 15, 22% goes to 25. So we're talking about 3 or 4% increases in most of those brackets. Curiously, in the 32 and 35% bracket, those don't change in the new tax law, right? So it's all these different, you talk about tax law change, you've got different limits as where the income is, different things. So, your mileage may vary depending on what that looks like. But for many folks that are currently in the 22 or 24% tax bracket, 12% tax bracket, these are what the scheduled changes are in 2026. So this tax year, we know what it's going to look like. Next tax year, we know what it's going to look like, unless Congress changes anything. 2026, this is what it looks like. And so this is so sort of core of the conversation, and that we hear in our professional discussions as we go to conferences and things is when if this changes like this, here's what it looks like. Right. So that's the facts of where this conversation even comes from, is being aware of, hey, if Congress does nothing, the tax law is going to look like this. Right. So then we get into the discussion about what do we do about that. And this is where I really love your insight, Bridget, based on your, long history as a CPA. Right. And you've been doing taxes longer than I have. And so, how do you think about when if somebody watches the first part of this episode and says, all right, taxes are going up, what do I do about this? What do you say to them?
Well, I say double down on the things that you know are working for you right now. So I am not a big predictor of future tax rates because I don't think that it's predictable. I think, because you just, in my experience, things change, but they change in unpredictable ways. So I think, but then there are things that could be on the chopping block. And so I double down on those. So for instance, right now, there's a 12% bracket and then there's a 22% bracket. And so that's a pretty big change. So if I think somebody's going to be in the 22% bracket, for instance, when they retire, I try to max out the 12% bracket. And that I call that arbitrage, or that, that delta, you would call it that chain.
Yep.
Move some income into the 12% bracket. Okay.
Yep.
So that is awesome. Another thing, could go away as a premium tax credit. So often, again, when people are retired, but before they're taking Social Security and required minimum distributions, they might have be on a marketplace health insurance plan and be able to get premium tax credit. And so we try to work their income so that they get a decent premium tax credit. But there's another competing interest, which is that if you're in the 12% bracket, your capital gains rates are 0. So geez, that's attractive. Again,
Right.
that might go away.
0 is
And
my favorite
I know
tax
what's
bracket.
happening now. Yeah. And so realizing we call it capital gains harvesting. We usually you do tax loss harvesting,
Right.
that's usual, but tax gains harvesting is what you do right now when people are in the 10 or 12% bracket or zero. So I try to double down on the stuff that I know is happening now. That's a good deal now. Uh,
Yeah.
I am you can talk about other stuff that other people recommend or that you look at with people, but those are my that's bread and butter for me. So
Yeah. Yeah. I don't
tell me
want to
what
just
you think.
I just wanted to pull on a couple of threads that you laid out there, and some of it comes from yours and my past conversations. But that idea of taking advantage of the things that you know now, what works now, and future tax brackets are unpredictable. And I go back to the 2016 or excuse me, 2020 presidential election, right? Joe Biden gets elected, and part of his talking points in his campaign were tax law reform, and specifically around
People that were proposing making a lot of moves because Biden got
right. Right. Specifically, they was talking about estate tax law changes, which would have
right.
been significant and meaningful on the campaign trail first, part of time in office. And as you just said, there was a lot of people that were, excited about making sure you get out in front of those things, understandably so. But there was nothing that was even in Congress. There was nothing that was being, eminent being passed. And here we are 4 years later, 3.5 years later, and those issues, I mean, nobody's talking about that in this run of the presidential campaigns, right? So very real to be aware of, hey, this is being discussed. We need to be ready for this. But in my opinion, and some of the things that I've learned from you in our discussions are, well, let's figure out, let's, you know, be aware and then take action when there's action to be taken. And those things were much more philosophical or esoterical, right? Hey, here's this thing we think we're going to do. Right now, I look at what's going on here, and you can take a look at those like the tax brackets are scheduled to change. That's not a make believe thing that somebody might want to do. This is, I mean, if Congress does nothing, this happens. And yet I take the same approach that you do, take the things that we can currently do, but I also don't put quite as much stock in, oh, tax rates are going to look like this in 2026, even though that's what it's currently scheduled to do, because we don't know, right? We don't know if is Congress going to let the Tax Cuts and Job Act expire and let it sunset? Maybe. I think that's probably a pretty low probability, but it's a possibility, right? Or is it going to change in some other way? Are they going to pass a new? I mean, the Congress can pass a whole new tax bill, right? It's possible. So this idea of even when we can look and go, hey, I can point to this in 2 years and here's what this looks like. I feel like we need to be aware of that. Hey, if we take income today and nothing changes what it looks like in the future, that's a factor in our decision making, but it's not like a guarantee that we know we're saving money by paying taxes at the 12% rate. We think it's going to save money, but we don't know that, right? And so just not making decisions based on, oh, here's what it's scheduled to do when it's locked, it's written in stone, because it's not written in stone. And it goes back to your exact point is, let's do the things that we know make sense today. And then let's keep an eye on that stuff in the future. Hey, if there's nothing going on and Congress lets us expire, here's what it looks like. Great. In, December of 2025, we can do some things, or November of 2025 if we know the tax law. But even at that, we go back a few years and Congress passed a tax law after Christmas one year that was effective for the next tax year, right? That Bridget, right? Right. So again, even you think, oh, geez, we're right at the end. We just don't know. And that I think is a really important point to take away from is, yep, be aware of this, be in tune with what's happening on things,
Yeah,
right?
here's
But
perk,
right. And then
especially at the
take
end of
action when there's
2025.
action to be taken, but not before that, because we just simply don't know what is actually going to be in case. So
Right. And if I were to take out my prediction ball, I think the most likely thing to happen isn't nothing or total rehaul, but extender bills that cherry pick the popular items and the things that, yeah, so cherry picking of popular items on year one, and that so in 2026, and then a major rehaul in 2027. That I think, from my experience, that's most likely because it takes them a while to negotiate all the
right.
changes. And but the fact that both, it's kind of like two incumbents are running against each other.
Right, right.
So they're going to be kind of, they're not going to have the learning curve that somebody who's brand new to the system is, a president who's brand new has. So it's possible maybe that favors actually something happening in 2026.
Yeah, it's interesting as you were just saying, I
I
kind
mean,
of forget. I think about the change, right? On one extreme, that everybody could do nothing, and we have this reversion back to the old law. On the other extreme, depending on who's in the White House and in Congress, we could have an extension of the current law and go for another. So we could either things could stay exactly the same, or they could go exactly back where they were before, which are two possibilities, probably pretty outliers, but not impossible. And then the reality is, it's probably somewhere in the middle of these things, right? There's going to be some changes, there'll be some extensions, there's going to be some overhaul, and again, I think that's the important takeaway as I see it from this conversation is that we just simply, when you even when you think you know what's going to happen, the reality is we really don't know until we get there. And take advantage of the things that you can do now, those things that you just described, right? Know what the tax law is, make a decision that's smart for you today, but don't get too far out in front of your shoes as far as making decisions about what you think is going to happen in the future from a tax standpoint.
that's my take.
Yeah.
So with that, let's wrap it up. I'm Bridget Sullivan Mermel. I've got a fee only financial planning practice in Chicago, Illinois.
And I'm John Shear. I've got a fee only financial planning practice in Middleton, Wisconsin. And both Bridget and I are taking on new clients. We'd love to hear from you. But we're also both members of the Alliance of Comprehensive Planners, which is a nationwide group of fee only comprehensive planners that think similarly to how we do. So if you like what you hear on our show and would like to find an advisor in your area, check out acplanners.org.
And don't forget to subscribe.